Right now, I have a wonderful person on the line, Blake Chandler from Yellow Brick Road, and today we'll be talking about big mortgages. So, good morning, Blake. Are you there? Can you hear me? Hello. Good morning.
Good morning, Jenny.
How are you today, Blake?
Oh, beautiful sunny day for us. So yeah,
Fantastic.
very happy.
Fantastic, my dear. Now listen, you're going to be actually talking about big mortgages today, but last week we discussed like low rates and people's ability to save. But Blake, that's not true with everyone. Why is that?
Yeah, that's right, Jenny. Well, I thought I'd discuss. People can still save, but some interesting data came out. Each quarter, the Reserve Bank of Australia releases, its selected ratios of household finances. So the latest data for December shows the ratio of household and household debt to disposable income has continued to climb. So household debt has climbed. So people have record high mortgages. However, so is the value of their assets. So the value of household assets is also at record high. And with record low interest rates, the ratio of interest payments to disposable income is still its lowest it's been since early 2003. So, with the interest rates so low, people are able to save, but people are also getting themselves into bigger and bigger debt. So people are focusing on their mortgages instead of saving, and also getting big mortgages to disposable income.
So what are your suggestions to people with big mortgages or those trying to enter the market?
Yeah. Well, Australians are heavily indebted, and that can be a stressful thing for most people. But most of this debt is residential housing. So while the debt is high, the value of the asset held is much greater than the debt. A few important things to consider. This is a national view, and it's different across different regions. But low interest rates and a fairly strong labour market over recent decades have contributed to Australia's preparedness to borrow. So for those that have borrowed, or those thinking of borrowing, it's the same old thing. Take advantage of these low interest rates. Make sure that you're reducing your debt on your own occupied property where possible. And that's making sure you have the lowest interest rate. Pay off as much as possible. Use your bonuses, use your tax returns, any extra surplus to put onto your mortgage. Make sure for your home you're paying principal and interest repayments, not interest only. And another thing, Jen, you can do is make weekly or fortnightly repayments instead of monthly. That helps reduce the loan overall. So if you've got a big debt, which most of us in this day and age do, take advantage of these low rates. They might not be around forever, and reduce the debt on your home as quickly as possible.
And to consolidate all of your monies into that one account, because it will help with the mortgage. We have an equity manager and account, and just putting everything into that, then when we need to, we redraw from that, so it's fine. It sort of just helps keep things a little bit more in our pocket, basically.
That's right, Jenny. I mean, what the data showed is that, yes, people have high mortgages, but the value of their assets, the value of the home is also at record highs as well. So it's about using that equity. Can you borrow against your home to consolidate debt? Should you, and this is why someone should speak to an expert, should you be investing in an investment property and using that equity to further build for your retirement and your wealth? There are a whole range of options. So if people have assets, they need to review how much equity do they have and what should they be doing with that, if anything, and how can they better their financial situation.
Definitely. And for those that don't even have superannuation, and I'm naughty, so I mean basically I'll be living off my house or having to downsize. My husband said, I think we really should be getting an investment property very soon. We're trying to really bring down that mortgage and we've controlled it pretty well. So we've got a nice gap now for, to try and even go out there and purchase something. It's just you're always trying to think ahead, because it's not just about us, it's about our children and the life that they're going to live. And homes today, you look at them and you think it's only worth 500,000, but they want 2.2 million, things like that. Where are the kids today supposed to save money so fast to try and stay in Sydney and be close-knit with all their family? It's sad, really sad.
It's hard, and that's why people need to look at their financial situation. It's hard, Jenny, but it is possible by working out and having a plan. And that's what people fail to do. They look at all these stats like the RBA and what's in the news and what people are saying about interest rates and the property market. But in the end, there's always going to be news and bad news. It's about sitting down and looking at your situation and making sure you have a plan and what that means for your future.
That's exactly right, and you have to have a job first before you can get the super anyway. But
True.
Oh no, well, goodness gracious. And is there anything else you would like to add today, Blake?
No, Jenny, just next week, and it's funny you said you've got to have a job. That's true, but what I'm going to talk about is some of the lending myths next week, some of the misconceptions that people have about lending, mortgages and finance. So, yes, exactly that. People don't go to a bank because they don't have a job, but there's many other things that people think, I can't borrow because I'm in this situation or because the bank thinks this. So I'm going to bust some of those myths and make sure people know when they can borrow and what situation that they should be in.
Sounds good. Sounds good, Blake. Thank you very much for your time this morning.
All right, Jane.
And you take care. Enjoy your week. And if anyone has a question regarding anything with their mortgages and finances, you can give me a call. I'll write the questions down and I'll shoot them to Blake next week. And thank you so much, Blake Chandler from Yellow Brick Road. Take care, Blake. Uru.
How can I pay my home loan off faster?
What's the best way for me to save for my retirement?
How do I know if my insurance is enough to cover me?
Hi, I'm Mark Boris from Yellowbrick Road. Whether it's getting into the right home loan, sorting out your super, or building a financial plan for the future, Yellowbrick Road has experts in your community to get you the right answers. Whatever your question is, we're here to help you.
Talk to Yellow Brick Road today. Visit ybr.com.au/plan. Fees and charges may apply. ACL 393195. AFSL 383825.
99.3 sponsor.